Hey, good morning, everybody. Welcome to QuantBox Live. Sorry for the tech problems yesterday. Let me pull up the site. Yeah, so it is 6:32 on Wall Street. It's time to get your global macro on. QuantBox Live, where we get the best fundamental investment opportunities across the global markets. S&P 500, yeah, we could take a look at that. Gold, oil, dollar, pound, euro, yen, so much more. Yeah, we'll take a look. So my name is Wayne McDonald. I'm the founder of QuantBox. I'm also a Harvard educated economist, and I love global macro, and I'm also a trend trader. If you're watching this on YouTube, the video you're watching is delayed by many hours. We're doing this live. If you are a subscriber to QuantBox, you can try that out for less than $8 for a week. So, anyways, with all that being said, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Here's the latest video going all the way back to Monday. Well, it's Wednesday. Well, yesterday there was some sort of update on Google. And remember, QuantBox is sitting on Google Cloud, and also my website has to play nicely with the Google Cloud, which, when there's updates, isn't necessarily straightforward, especially if you're like me, where I have something like 18 different Gmail accounts. So, anyways, the browser had a heart attack yesterday, but everything else was right as rain. So I had to figure all that out. So this should work, is the theory. See, now I can't access this because QuantBox, the website, is talking to QuantBox, the Google Cloud, and you have to have the appropriate associated Gmail. So, anyway, so I picked the right one. Those are just some of the Gmails that are logged in right now. So, anyway, so I picked the right Gmail associated with QuantBox. I switched the account because remember, your browser can have multiple Gmail accounts logged into the actual browser. So the site, your browser, and the cloud all need to talk to each other. Anyway, so here we are, and holy smokes, two things going on here as we immediately log into the dashboard, and wow, there is no good, no bad. There's no good, there's no bad. Well, we have to further refine because hey, wait, my drawing tool now ain't working. You're kidding me. Hang on, my drawing tool ain't working. Hang on. Task manager. It's such a pain when it does this. Whoa, where did it go? I have to end the task, end task. And let me reboot the drawing tool. Oh, there it is, way over there. All right, cool. So now I can move that. Great. All right, so it looks flatlined, but look at these outliers. The Japanese stock market is way down. And Bitcoin is way up. Much more than anticipated by quantitative analysis of economic data. But nonetheless, one of the things I did focus on, I think it was Sunday or Monday, was actually preparing for the Japanese stock market to fall. So I kind of got lucky on that one. But Bitcoin ripper high, and there's such outliers. So one of the things that statisticians will do, because what we're trying to do is figure out these asset classes, and these outliers are so dramatically, like, look at this. Japanese stock market down 2%, Bitcoin up 3%. Everything is somewhere between 0 and 1. So these outliers really flatten out or skew. so we could remove them and try to see what's going on with just the currency markets. So if we get rid of commodities, which is Bitcoin, indices, which would remove the Japanese stock market, we can reload the data and we can get a better picture. Now look at this. Holy smokes. So dollar weak against rand, dollar weak against yen, but not by much. Dollar weak, but like look at, remember how we just removed one asset that was +3 and another asset that was -2%? Look at this dramatic outlier now is only down 0.8%. And it's an exotic too. So you're like, that's not that surprising. So like the worst of the worst now are down 0.22, 0.2%. Okay. So when you see when you see this, there's really nothing too dramatic going on. Um, but there's a lot of outliers now in the sense of there's a lot going on here, and these assets you would assume would be more bearish than bullish, and they're definitely not bearish, right? So and then these are kind of just the same, just built the opposite. So what I see here is dollar weakness. Okay. Stock markets over the last several days have been mostly up, as you can see. So that gives you a sense that we have been a bit risk on. That's how you want to interpret this. If the stock markets are going up, and remember, this is the Japanese stock market, the US stock market, right? German stock market, UK stock market. And so we're looking at global stock markets, and they're generally up, huh? Going all the way back to the middle of May. Yeah. So that's, you know, generally US dollar weakness in that scenario. That's a bit of a risk on play. Okay. Now, remember, that's what the market is doing, but it doesn't make it economically correct. Okay. It's just what the market is doing. If you were to, draw a mean here? No big deal. So let's take a look at what's actually moving right now. We'll take a look at the market heat map. So as we saw here, okay, Bitcoin's the biggest winner. Japanese stock market's the biggest loser. There's your rand. So what else is going on? Okay, any pattern? Well, Kiwi yen down, Euro yen down, CAD yen down. All right, so quite a bit of yen pairs down. Now, I actually shorted the yen pairs Sunday, I think, Sunday night at the market open. Really, it was Asia open, but for me, that's Sunday night. So okay, yeah, 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 no, no. I think I'm still short euro yen. It's not a big mover, but I'm not terribly wrong either. What else going on here? Some Swissy strength. You can see Swissy, but yen is stronger than Swissy, right? So Swissy is stronger than dollar. Swissy stronger than Kiwi. Swissy stronger than Euro. Swissy stronger than CAD, but yen is stronger than Swissy. So yeah, yen pairs down first, then you would sell Swiss franc pairs. But look at the Swiss franc pairs are really, I'd call them neutral. All of these are neutral. Yield on the 10-year T note 3.7, huh? Wow. Okay. 3.7. That's the yield. It's kind of interesting. Actually, I want to look at that. I'm going to look at that. Interesting. So if the yield is going up, and this is not a strong trend here, you can see a month ago we are down here at 3.5. right? 3.55. And now it's June 5th, June 6th period, June 7th. We're kind of, you know, 3.7. That's not dramatic, but you can see it's more up than down, right? So our job here as investors to say is what's the general trend, right? That's QuantBox does it automatically, but that's what we're trying to figure out. The slope will tell you basically the speed and direction. Positive slope is up, obviously, negative slope is down. So, how do we read this? Well, if the yield is going up, the bond market is falling. This is the yield, not price. So, the bond market is bearish, which still points to then the stock market generally bullish, huh? The traditional correlation is um, if the yield on the 10-year T note is going up, then the price on the S&P 500 is also going up. Think of it this way. The government is trying to borrow money, and to entice people to do it, they're offering higher and higher returns. They have to try. Now, this is actually kind of interesting because we just passed that debt limit, right? And what does that allow the government to do? Sell treasuries. So this could just go up if they just keep selling so many treasuries that they sell more treasuries than there are buyers for treasuries. How much are slated in the next couple of months? $1 trillion of new issuance. And if there's not enough buyers, guess what? These yields are going to go up because the government has to do it. They need the money. They're desperate for the money. That's why we had a debt limit problem. So now they're going to issue, on top of our current debt, another $1 trillion. And if nobody wants to lend the money, then the yield will have to go higher to attract them, right? So anyways, I think that's kind of interesting. And so what QuantBox is looking at is under the current, under the current regime, if you will, yields are continuing to go up. If we look at seasonality, okay, we're moving into a flat period. So don't get too excited. But if this is going up, then you might want to look at like the S&P 500. Okay. It's neutral, but it's going up. So how do you handle that? Well, technically it is going up, as you can see here. There's no doubt about that. So you don't want to sell it. Okay. Retail is heavily short. Okay. So what you want to do is tiptoe, tiptoe, tiptoe until it's no longer an uptrend. Okay. So between like June is typically an up month. Okay. July and August are typically more down. So we got to prepare for that. So how could we analyze when this is going to fall? So we see between June and July, there's up. Okay. That's now. And then July and August are down. So when do we know? How do we use technical analysis to, let's say, anticipate the price in which this seasonal move happens from seasonally bullish to seasonally bearish? Well, let's go take a look. Okay, let's go take a look at the stock market, the S&P 500. And now we're using technical analysis. Now it doesn't think forward, does it? Okay, QuantBox is trying to say, hey, you know what? In the next 12 weeks, we're probably going to retest back down to 4,000 or below, but whatever, down, right? Like more down is coming. It's sort of like the ebb and flow. It's like predicting tides, so to speak. You're like, wow, the water's really high on this beach. And someone else says, well, yeah, it's all going to recede. And they're like, how do you know? How do you know that? And I go, well, it usually goes out in and out twice a day. Well, anyway, so let's get to the technical analysis. The using technical analysis, the projected high for the month of June is up here. And remember, we're thinking somewhere between now and the end of June, this asset class has very much been in the past history. If you look at the last 5 years and the last 20 years, on average, we end the month down. And so now you take that logic, thank you, QuantBox, and then you throw this in. Wait, over the last 20 years, this almost what, like, let's say, I can't say almost always, but very, very, very often. How about that? On average, this heads down and we're at the resistance price. So now you can say, oh God, well, if this does roll over 4,300 to 43.43, let's just do it that way, 43.43, so you can remember it. It's actually a little higher. I call this an Arctic turtle, where we could go above the monthly target to hit the weekly target, and then the monthly target guys are in. So let me widen the band a little bit. 4,300 could be the top for the stock market. Okay. It could go all the way to 43.70. That's super extreme. More likely 43 and a half. So let's just dumb it down. Let's get rid of the other one. It can, but it'll be a spike. So there are two places to anticipate a reversal based on your seasonality strategy and this idea that, I don't know, things are changing on the yield side, but we already tested it to the pip and it dropped. Okay. So the anticipation could be something like that. That's how you do the technical analysis. Is that going to happen? Oh, I don't know. I don't know the future. Okay. But again, if you care about averages, remember, averages never happen, right? For example, if 50% of people are here and 50% of people are here, then the average is here, but there's nobody there, right? If you have 50 people here and 50 people there, the average person is here, but nobody's there. They're all here and they're all there. But anyway, so average is a human construct, but nonetheless, very often, usually, how about that? Usually this asset class rolls over pretty soon. Okay. And it on average, we're not thinking price, we're just thinking direction. And then you try to explain it where we're going into the summer, nobody's trading, people are on holidays, maybe they take some risk out of the market, go to book some profit, end the first half of the year with some money in the bank, and then I don't know, do some hunting in Montana or something, huh? Wine and dine clients in St. Croix. I don't know. Okay. And then you come back late August to get your trades back on. Okay. So anyway, so that all kind of fits the logic, right? So anyway, so for today, for the next couple of days, let's say for the next week, we kind of want to watch this and see if it rolls over, double top, lower high, lower low, or some version of this, the same thing. Okay. That's what we want to look for, and that'll give you direction. Slowing GDP in Australia. Huh? Look at that, huh? 0.2. Big miss too on balance of trade. Oh yeah. Exports down 8% in China. Holy smokes. Imports down. That's bad. They're not working and they're not spending, huh? It's not good. That's definitely contraction going on in China. We're still waiting for that huge reopening play. So that could impact the value of the Australian dollar. And it might be why Australia is not so hot. The unemployment rate in Switzerland is less than 2. Holy smokes. Different world, huh? Yeah, guess what? Go get a Big Mac at McDonald's. It's probably 25 bucks. Okay. So anyways, looking at some of these numbers. Retail sales. Yeah, Italy's in trouble, huh? I was just in Italy and I thought everything was cheap. Yeah, thought it was cheap. Couldn't believe it. Um, Here, if you go to a fast food restaurant here in America, it's pretty close to like 10 bucks a head now. Like you take a family of 4 to McDonald's, you're going to drop 50 bucks, right? In a in like Venice, in a nice little restaurant with mahogany on the walls with artwork, right? An entree, fancy entree with like fancy stuff on it was, I don't know, 15 euro. Glass of wine was not very expensive. And this is in Venice. Like, talk about tourist central, huh? But was not expensive in terms of dollar, huh? Whoop, whoop. Gotta love that dollar. Yeah. Yeah. The best, though, my recent trip to Cuba, my, let's say a glass of 15-year-old rum was about $3 in terms of US dollars. A glass. And if I remember it correctly, that might have been a double. Like, wow. So thank you, US dollar, huh? That's the foreign exchange for you. So, anyways, we got some balance of trade out of Canada and the US. That's cool. That's just showing the direction of money, the flow of capital. So that's kind of interesting. Okay, Australia's balance of trade coming up. And then, we have unemployment tomorrow out of the euro. Yeah. Cool. So we are now preparing for, I would say, logically or at least emotionally, or a change in direction is very possible. In particular in the stock markets, and then from that, it changes the flow of capital into different asset classes. So we're waiting for that to possibly happen in the S&P 500. Meanwhile, I already did that in the Japanese stock market on Sunday, and it's already on the fourth down day. Okay. If you think that's going to be short lived, buyers of the Japanese stock market are going to like it down here at 3150. Okay. But I would still anticipate, okay, what seems to be natural. head high by July. If you can predict the height of corn, why can't you predict the value of the Japanese stock market based on what usually happens? So we got to have a heads up. Even though you've been buying the Japanese stock market for months and months and months, we might be going into a great moderation, aka summer holidays. Cool. I hope that wasn't too long. I will see you later. Thank you for being subscribers of QuantBox. Remember, if you're watching this on YouTube, it is 6:57 in the morning. You're probably looking at your watch thinking, "Oh my God, it's like almost 11 in the morning." Well, why don't you try QuantBox as a subscriber? And all these live events are included with your subscription. Cool. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful trading day.